So what's up, homeowner? Or should I say homie? So you're thinking about buying a home, but you're worried about those high down payments and credit score, right? Well, what if I told you there's a way to get into your dream home for 3.5% down and some flexible credit options? That's right, it's possible. In this video, I'm breaking down everything you need to know about FHA loans. This is the ultimate FHA program guide. Lower credit requirements and low down payment. Let's dive in. So what the heck is an FHA loan anyway? So FHA actually stands for Federal Housing Administration. So it's a government agency. What this is, it's a mortgage loan that's actually insured by this government agency. These loans are designed for people who may not qualify for a conventional loan. It's actually pretty great for people who have lower down payments and also lower credit scores. Now, FHA, or the Federal Housing Administration, doesn't lend money on their own. They're not actually lending out their own cash, but instead they actually provide insurance for lenders who are lending out the cash for the home buyer. Now, unlike conventional loans, which are not insured by the government, FHA has more flexible underwriting conditions, making them more accessible to a wider range of buyers. So one of the biggest advantages of an FHA loan is the lower down payment requirements. Sometimes you don't have to put a down payment at all, but that's a whole nother video. But for the standard traditional FHA loan, there's actually a 3.5% down payment, which is amazing compared to the standard conventional loan, because a lot of those are 20% down. Probably the second biggest benefit when you're doing an FHA loan versus a conventional loan is that it has a lot more flexibility in regards to your credit score. On paper, you can even go down to as low as a 500 credit score, but you have to put a little bit more money down. Now, full disclosure, it says that on paper. I personally haven't seen a lot of buyers doing that just because your rate goes up and there's a lot more to it. But on paper, you can go down to the 500. This is according to FHA.com. FHA also allows for higher debt to income ratios. So this means it'll be a lot easier to qualify if you have other debts like car payments or student loans. So if you're looking to put down something like 3.5%, the minimum credit score you would need to have is a 580 to purchase this house. Now, the higher your score, actually, the better your interest rate is going to be. Just like with any credit or lending process, the better your credit score, the lower your payments are going to be. Now, to get in the door, you have to have a 580 for 3.5% down. But if you're at 600, 620, 640, your payments actually get cheaper. Now, let's talk about your down payment. With your down payment, it can come from a number of sources. It can be a gift. It can be from your savings, and there's even an option for the down payment assistance program to where you actually get it from the government. So let me give a little example of how all this works. So say you're buying a house for, say, $400,000. If you're putting down 3.5%, that means you're coming up with $14,000 for your down payment to buy a house. Now you compare that same house if you're doing a conventional loan, well, you're actually gonna be putting down $40,000 to buy that same house. So that's why FHA is pretty awesome. Now let's talk about reasons why you might not want to do an FHA loan. The biggest thing I hear is because of mortgage insurance. Now, mortgage insurance isn't what you would typically think of like for the house if something bad were to happen. Like if you have a car, you have car insurance, right? Well, mortgage insurance is not for you and it's not for the property. It's actually to ensure the lender who gave the money that they're going to be paid back if you default on the loan. The good and the bad thing about mortgage insurance is that it's the reason that they're able to be so flexible with the requirements for credit and also the requirements for down payment. The bad part about it is that it does add to your monthly payment that you would not have had if you were to do a conventional loan. Well, depending on how much money you're putting down on the conventional loan. Some loan types where you actually don't have that insurance. Even with that being said, with you add in that mortgage insurance on top of the savings that you're having with the lower down payment, it actually helps a lot more people become homeowners instead of paying rent or just living where they don't want to be. Now, there are limits to this loan program also. You can't just go buy $1 million house with an FHA loan, unless you're in California. So FHA does have its limits, and those loan limits can vary based off of where you are. Here in Phoenix, the FHA loan limit is about $530,000. Now, that's for all of the greater Phoenix area. That's like Scottsdale, Goodyear. It's all of Maricopa County. So it varies based off your county and your location and that median sales price. If you look at other parts of the country like California, well, if you're looking at Los Angeles, is over $1 million for your FHA loan limit. There are some requirements when you are doing your FHA loan. Some of the basics are proof of employment. You have to have some valid income coming in. If it's paid like under the table, things like that, they have to be able to count your actual income to verify that you're going to be able to pay the loan. They do ask for your valid social security number, and also this has to be your primary residence. When purchasing the home as well, there's also an appraisal process, and there has to be a certified FHA appraiser to actually go out to the house. So there are some misconceptions about FHA loans also, and I want to bust these myths. The biggest one, the absolute biggest myth of an FHA loan is this is for your first house. And yes, most people who are purchasing their first house use an FHA loan. It's actually a great tool to purchase your first house, but it does not have to be your first house. It could be your 7th house, your 5th house. The thing is, you can only have one FHA loan at a time, but it has to be your primary residence. So if you are moving from, say, LA to Arizona, you can use your FHA loan, assuming you're selling your home or you never had one, to purchase this next one. The second biggest myth I want to talk about for FHA loans is mortgage insurance. So mortgage insurance gets a very bad stigma simply because it's an extra payment that you wouldn't have if you were putting down a certain amount of money, like on a conventional loan or 20%, things like that. Now, it's not the best thing, but I will tell you it's a whole lot better than not owning a home at all. And as long as it fits within your financial budget, it's usually shakes out to be the same, or if not better than paying for rent in the same area. So just to recap, for FHA loans, they offer a lot more flexibility for credit, better debt to income ratios to purchase, and some of the lowest down payments you can do. If you're thinking about buying a home, I definitely would encourage you to consider looking at the FHA product. It might save you a ton of money actually. If you found this video helpful, please consider liking the video. It takes a little bit to make these. As always, I'm Charles, eXp Realty. I'll talk to you soon.